bueno. And we will be ready to take it away in just a moment. There's the screen looking good. I'm going to go ahead and step out of the way. Again, welcome everyone. We do appreciate you spending the time with us. The last question I know we're going to get. This presentation is being recorded. Sit back, relax, take it all in. If you have any questions, jot them in. Let's take her away, Jeff.
All right, fantastic. Thank you, Daryl, as always. Hey, David from Wimberley in Wimberley. Hope you're doing good out there. The weather's awesome. As I get through this week, I'll actually be able to get back to you on a couple of your questions. Happy, what is today? Today is Wednesday, February 25th. We do these live. They're not recorded. So I always like to kind of see how everybody's doing and stuff like that. And this is the third webinar I've done on this. And so the first two, I certainly spent more time on kind of the whys and all that stuff. And today we just kind of dive into the meat, so to speak, which I think is good for a third webinar. So if you've sat through this before, you won't have to hear all the same intros and stuff like that too. But don't worry if you're brand new, you have no idea like who I am or what we do. It's still pretty concise, and like I said, we just kind of we dive right in, which I think is great. All right, so good. And on that note, let's dive in. I've got a little bit of a cough going, so it sounds like I'm not talking for a minute, what I do is I'm just muting the mic, so you don't have to hear me cough, and then I go from there. All right, so I always like to say, if you're new to trading, be smart about the risk, especially around options. With options, sometimes people get excited and say, wow, I could sell a naked call. And, that might work 9 times out of 10. But that 10th time, you sell a naked call on something like GameStop, you're not only out of money, you're kind of out of the business. And so you just want to, know your risks. You can always set up options trades with a very maximum specific risk in mind. And I think it's always good to let people know that. So I think the markets are kind of fascinating right now. And I actually personally love crazy markets. I feel like most of the time I've been trading. And, I was actively trading in the late 90s during the 2000 crash, the 2008 crash, all the crashes and all the things. And so I think volatile markets are actually kind of fun. It's less of a buy and hold kind of a thing and more that you actually need specific signals on specific stocks just to kind of, stay out of the way of all the messes that are happening and to really simplify things. And so I like that personally. And what's interesting right now in the markets is that we've got a tale of two cities. The SPX is actually looking pretty good. Had a nice 50-point rally today. It's been spending a lot of time between 6,800 and 7,000 trying to break out. But the Mag 7 is not doing so well. And the Mag 7, of course, that's Tesla, Amazon, Microsoft, Meta, and all those guys. And the challenge there is that those 7 stocks represent like over 30% of the S&P 500, let alone the NASDAQ. So it's going to be hard for the S&P 500 to really break out until the Mag 7 gets going. And that's okay. I have a long-term portfolio. I just leave it in the S&P 500 index. I'm not worried about that. But in the short term, if we're swing trading, we don't want to get into trades that kind of have weights on them. It's kind of being weighed down like that. And so that's just something where we want to kind of get into those ideal conditions in specific stocks that are going to give us our biggest bang for the buck. Now, a short note on my background, I went from, selling cookies one summer in high school. I worked at the mall, cookie factory, whatever it was. I made $1,000. Came home one day towards the end of the summer. I had saved up $1,000. Obviously, my overhead was low. And my stepdad, Lance, he was a broker then, still is. He's 80 years old, running strong, managing wealth, which is fantastic. And I heard he and his friends talking about, buying call options on Intel. I didn't know what a call option was, and I didn't know what Intel was, but I was intrigued. So they told me what they were doing, which I didn't understand. They spotted me the $1,000, and they said, look, if it doesn't work, you're going to owe us money, but if it does work, we'll give you the difference. Easy enough. A couple of weeks go by, they come back, and they give me $800. And so it was a real wake-up call for me because I'd spent the entire summer laboring for the awesome wage of $4.25 for each hour that I worked, and saved up $1,000. And then here was a transaction where you just kind of, with some ideas and some studying, you execute an idea and you make $800. And I was fascinated by that, and I was hooked. And so I went on this kind of long journey, and after some false starts for the first 8 years and kind of a boom and bust cycle, got really into a groove, had some big trades, continue to trade, but really went heavy and active. And so I've had $10 million trades, and the question is, all right, are we going to get any more of those? A lot of that, of course, has to do with position sizing and stuff like that, and of course diversified into rare coins and land and all the fun stuff. But the question from that is, what are the opportunities here? And I think a big part of this is when I look back, and obviously there's a lot more trades, and there were a lot of trades that did well. But these stand out, and what I like to do is look at the ones that stand out. And William O'Neill said this too. He said, look, study the winners. Go back, study the winners. The winners display specific behaviors, and you want to understand what those behaviors are. And so what I've done here is kind of gone back and looked at my winners and just kind of identified what were the specific behaviors that they exhibited, and then how can we hone in things like the squeeze to capture those behaviors more effectively. I'm not going to tell my house story. I've told that the first 2 times. Needless to say, it was one of my bust moments, but it really taught me a lot of lessons about trader psychology and things like that. And really in trading, the biggest enemy isn't the market, or hedge funds. A lot of times it's yourself. And so either you want to A, make sure you're in the right frame of mind, or B, that you have a setup that's so foolproof that all you have to do is follow it. Like, that's it. A lot of people out there aren't sure, like, okay, Netflix is down 50%. Maybe I should buy it. Maybe not. I don't know. But if you've got a setup that's proven time and time again, all you have to do is follow the setup. And so that really was my takeaway from that. And that the idea here is that if you chase the money, you're going to destroy yourself and those who depend on you. Have patience to wait for a superior setup, and the profits will take care of themselves. And here's the tough thing about trading. And this is the thing that will always guarantee that human nature is what's going to drive the markets, because you can do everything wrong on a trade and still make money. I think it's the most awesome thing about trading. You can break every rule in the book and still make money. Okay, and this is why the lessons are hard to make stick. Now, the thing about that is that you could break the rules, 9 times in a row and win, but that 10th time you're wiped out. And that's kind of how that works. And I've seen that play so many times. Or, somebody runs an account from 50,000 to 500,000, and then they're back to 50,000. That's the most common tale in trading that I've ever seen. And that just happens all the time. So you end up learning patience after much pain and suffering. But if you end up in a setup on the wrong stock at the wrong time, even if you're patient, the end result is still the same, which is frustration. So I think that's the worst thing, is that you finally learn patience, but your setup doesn't work for you. It doesn't pay you. And that's what we're going to talk about. So big trades, of course, are nice. This was I remember this on January 14th, 2014. I had a trade on Tesla that made $1 million in one day. It was insane. I had been trading long enough at that point that I recognized something special was happening, so I did press it. But that was kind of the first time where I had something like a squeeze and all the things that came together for a really big trade. And for those of you that don't know what the squeeze is, this is all it is. It's just something on a chart that indicates that there's energy building up in a stock. Okay, and if there's energy building up in a stock, and you can see here, it's kind of, after like Usain Bolt runs the 100-meter dash, he doesn't immediately go and run another 100-meter dash. He rests, he gets some Gatorade, he loosens up, and maybe an hour later, he has his next event. And it's the same thing with the stock. So here, the stock had a big run up, and then it just kind of chills out for a little bit. And the squeeze, these red and black dots, is just an indication that, hey, the stock is now quiet. It's building up energy for its next major move. This is the ideal time to get in. Okay, you're not chasing at this point. You're actually getting in when it's quiet. And if you're trading options, you're getting in at the best time, because when it's quiet, the premium on option prices comes down. And so you kind of get into it, and then you wait for the energy to release, and that's when you get paid. So that's what the squeeze is. And we're going to be talking about that. Now, one thing I've always done consistently is any money I make in the markets, I take out a portion and I put it into tangible assets. This is our ranch in Wimberley, Texas, and this was part of what the first Tesla trade turned into, and then subsequent trades. And I think it's always good because otherwise trading becomes this weird video game. And so you want to kind of see that there's physical things that have manifested as a result of trading. And it could be a gold coin, it could be, you know, a trip to the Bahamas, whatever it is. I think it's so important to kind of turn trading gains into tangible assets. One of my favorite trades, and it's not really a trade, but this was, gosh, in the early, I think it was mid 2000s. I was in Las Vegas for a Traders Expo, and we were playing craps. I had $2,000. I was playing the no pass line, of course, you know, contrary bets, contrarian, and I won $16,000. And so what I did is I walked back into the exhibit hall the next day, and I took that $16,000 in cash to the coin dealer, and I said, I want to convert this into 1 ounce gold coins. So he gave me, you know, I think gold at the time was like $800 an ounce. I remember I ended up with 20 coins. I still have them to this day. And today that $16,000 I won in Vegas in that stack of 20 gold coins that sits near my desk is worth $100,000. And so that's a great example of turning a win into something tangible that either is an experience that you enjoy, that you can enjoy with your family, or is an asset that kind of continues to grow. So all that kind of fun stuff. Okay, so let's dive into the meat of this. Now, I've talked about Tesla, and I've certainly made a lot of money on Tesla, but the reality of it is not all squeezes are created equal. So here's a squeeze. You got the dots, right? And if you follow the rules, it's like, okay, there's dots, so I'm looking for energy here, and so I'm looking for a big move to the upside. Well, if you bought a bunch of calls here, what happened is the stock got absolutely destroyed. Okay, and it's like, all right, here's another squeeze. This must mean that the stock's about ready to go up, and instead it also gets destroyed here. Now, this squeeze actually happened to work, but here's what happens in a situation like this is that someone buys calls here, it doesn't work. They buy calls here, it doesn't work. So when this one happens, now they're like, you know what? Screw this. I'm not going to take this trade because the last two didn't work. Well, what they didn't know is that the last two were crappy setups. They were not ideal squeeze setups. But this one was, and this one was perfect. And then this other one came up. They said, oh, that worked. So, okay, I'll go ahead and do this one. And then that one didn't work either. So I see that a lot too, where people are like, well, I took the other squeezes and they didn't work, but you know, it wasn't really a good squeeze. And so that's really the question that we're answering here tonight is how to identify that. So what we want to do is we want to have a setup that's easy. And what I love about the squeeze is that it's absolutely, without a doubt, like, oh, there's a squeeze developing. Okay, there's the dots. That's great. There's a squeeze developing. But we want to get to the point where we trust the setup, that the current trade has a solid chance of running. Because if we don't trust the setup, what's going to happen is we're going to get out way too soon. I've certainly done trades where I've made big trades and people that are following me like, oh my God, I got out way too soon. Because it's hard to hold on, especially when you've been in trades that were up, but then came back and stopped you out, right? And it's just like, okay, so how do we do this so that we have a setup that we trust, but we trust it enough to let it play out? And I think that's probably the hardest thing for a lot of traders is that if they've been burned before, that burn is what stays stuck in the memory. And so they're like, oh God, I got to get out. I got a little profit and I don't want to lose it. And then they miss out on the big trade. So what we want to find out is that, okay, it's not just a squeeze. We want to know what an ideal squeeze setup looks like. Not a mediocre squeeze and not a squeeze like those Tesla ones we saw that actually ended up failing. Bad setups make it hard to trust it the next time. So instead of just kind of taking any squeeze that comes along, we want to identify what the best squeezes are, because once we do that and we start to gain confidence that, wow, these things really work, we're going to be able to have confidence making bigger bets, and we're going to have confidence holding on and letting them play out. And that's really how you make bigger gains in trading. Buying options at 5 and selling them at 25 once in a while is a lot different than buying options at 5 and panicking and getting out at 6. Okay, because when you miss out on these, you miss out on those spikes in your equity, and that's kind of the whole point, is you want to do that. So we want to avoid mediocre, and so which begs the question, how do we avoid mediocre? So the basic OG, which original gangsta squeeze, was life-changing for me. It gave me, for the first time in my trading career, a high probability moment in time where I could take action with confidence. It wasn't a guess. It wasn't, let's see what happens. It's, man, if I do this trade, there's a decent chance that this is what's going to happen. But I noticed is that when I had to explain it and hone in on why I chose one squeeze over another, I was also bringing in a lot of information on moving averages, chart patterns, stock behavior, and overall intuitive knowledge that I've absorbed over the years. And all of this is stuff I just kind of understood, quote, in my bones from looking at charts for well over 10,000 hours, but I could never explain it in a way where people were like, oh, I absolutely get what you're talking about. And so I was like, okay, well, that's a challenge. So, and going back to this, it's really just, there was, when I saw the squeeze, there were other squeezes on other stocks, but I wasn't interested in those. I was interested in this one. Okay. So why was I interested in this one? Because it's not just the squeeze by itself. There's other factors that come into play, and we want to be able to quantify what those are. And so the biggest challenge with something like this is that on any given day, if you run a scan and say, okay, I want to know how many squeezes are out there, how many squeezes are out there that are, within 15% of new 52-week highs? Well, I ran this today. There's 39. So we're going to take all 39 of these, or are some of these squeezes better than the other? And the answer is, of course, some of those squeezes are way better than the other ones, and we want to narrow that down. We just want to narrow it down to the best one. And also through all this, in addition to talking to other traders and clients, my kids are coming to an age where they want to trade. And when I would sit down and explain the squeeze to them, I really felt like a failure because it wasn't clear. Like, I don't get it. I'm like, oh, okay. But this, and I would explain all these different things. And then I could see that they would get frustrated because they didn't even know what I was talking about. Because, they're new to trading, right? They're like, okay, well, what's a cup and handle pattern? What's this? So that also really got me to thinking, it's like, okay, let's really hone in and get this. So let's go back to this Tesla chart. So here's Tesla, right? Here's a squeeze. It doesn't work. Here's a squeeze. It doesn't work. Here's a squeeze. Okay, it does work. Here's a squeeze. It doesn't work. So can we hone in on these and find out why this one worked, good and these failed? And the answer is yes. And so here's the Squeeze Pro. This is the Squeeze Pro. This is something we did like 7 years ago. And it's been 7 years since we've updated the Squeeze. And then now we have what's called the Squeeze Ultra. Boom. And on the Squeeze Ultra, you'll notice a couple things that, yes, there's squeezes here. They're different. They're not the same because they have different parameters. They're more updated parameters. But you're also going to notice that what we're looking for is called an ideal situation, okay? And an ideal situation clearly shows these white arrows at the bottom of the squeeze, okay? So what does that mean? That means that if there are white arrows, then that's a moment in time where the conditions are absolutely ideal for a squeeze to the long side, okay? Now, when I say squeeze, sometimes people think, you mean a short squeeze? No. So the squeeze is simply, when you see these dots, think of it as a squeeze of volatility, like compressing volatility. So it's lower and lower and lower. It's like if you're holding a puppy and at some point it's going to start squirming and want to get out. And it's the same way with the squeeze. And so what we want to see then is the only thing I'm interested here with this is that I'm looking for squeezes to the upside, because for a squeeze to go to the upside, for a stock to go to the upside, you have to have everything come together in almost a perfect way, because it takes a lot of energy, a lot of buying, a lot of institutional buying power to come in and push a stock higher. All that has to happen for a stock to fall is a lack of buyers. You don't even need sellers. If there's just not anybody buying, just normal stop losses and things like that will start driving the stock lower. So when we see the arrows indicate that A, there's a squeeze, and it's an ideal long set, okay? Period end. So we don't have to wonder like, oh, is this setting up to go higher or lower? So as an example here on NVIDIA, so we have NVIDIA here, and it's like, okay, great. Here's some arrows. Then the odds of this continuing higher is very high. Okay, here's some arrows. The odds of this going higher is very high. Here's some arrows. The odds of this going higher is very high. So that's what we're looking for, is if we have the squeeze with the arrows, all of a sudden our confidence level can go up that this is a high probability moment in time where a move to the upside is essentially essentially what we're looking for. Okay. And again, nothing works 100%, but the probability of this has become so high that I've now found that I'll only wait for the arrows. Okay. And then when I do, I'm willing to put in a little bit bigger position size on these. Now, here's the other thing about this that I found that's super important. One of the most important things in trading is what you don't do. And, I remember reading it a long time ago. I read this interview by Jay, and they're like, what were some of the deals that you did to get so rich? And he said, well, the best deals were the ones that I ended up not doing. And, so it was recognizing that, the deals that he passed on, they just weren't good. And so it's the same thing in trading. Now, if you look at Microsoft, over the course of the last 13 months, there's only been 5 days where there was an ideal squeeze. Now, there were a lot of squeezes, but only 5 days where it was a really high probability move to the long side. Every other squeeze that came up failed. Not almost everyone. And so if you spent your year trading Microsoft, now obviously there were some good moves after earnings and stuff like that. But if you're looking for non-earnings related moves, then it could have been a very, very frustrating year trading Microsoft. Now, you might say like, okay, well, don't you short stocks? I do short stocks. I actually prefer to short the indexes. So what I have found is in general is that I like to look at specific long setups on stocks, and then I can do bearish trades like on the SPX or SPY or QQQ. And then sometimes there are stocks that come up. And by the way, there is a way to kind of find out is like, okay, if it's an ideal short setup as well. But what we find is that by really focusing on the long setups, by default, if it's not a long setup, then it does have a possibility of a short. Okay, so let's look at this. So sometimes the best trades are the ones you know in advance to pass on. So the big idea here is that there is a visual arrow when the ideal conditions for a long squeeze are currently present. This saves time, it saves money, and it saves a lot of frustration. If there's no arrow, then you have a clear signal to pass on this one, and then be patient for something better. Okay, and I love that because, again, biggest question I'll get is, well, what about this squeeze, and what about this squeeze? And now it's kind of like, look, if there's no arrow, pass on it. Why put your hard-earned money into something that is mediocre, right? Now, I think this is an interesting one. This was so this is the biggest trade I've ever done. This was I had made $5 million across 2 accounts trading Google. And what I loved about this is that, so I was in the squeeze for 3.5 weeks, and for 3.5 weeks, I was basically losing money. And I did sell some put credit spreads, but it was going up, it was going down, it was going up, it was going down. Of course, I'm now starting to lose premium on my long calls, but I did have call debit spreads and put credit spreads. And then it did this where it was just like, oh man, but it never stopped me out, because for a stop loss, I'll do, this is the Keltner channel, like -1 ATR. And so if it closes below that, I'll stop out. It never stopped out. And then it did fire long, and then it exploded. And so, and this was something where, we would add to it and things like that. And so over the course, this was 2 accounts that I was trading. And at the time, my Tastyworks account, this turned into an $818,000 trade. I was in Amazon too. That was good for like 400,000. And then in Thinkorswim, I had a bigger position, and that was good for 4.3 million. And, and a lot of this too is like, hey, if you're buying, this is the debit spread. I bought at 38, sold it at 100. There were some of I was selling put credit spreads for 20 and buying them back at 2. This debit spread, I bought at 950, sold it at 57.80, right? It was some big moves. Now, here's the fascinating thing about it is that I know other people that took this trade and they got shaken out because it just wouldn't go. Now, if I throw the ideal squeeze on here, you can see that the ideal squeeze actually turned up here. So what's fascinating about this is that, instead of sitting there and just, and this is tough. I mean, this is tough to hold on to because it's like, it's not going. I'm in options. I'm losing money. Maybe I should just cut it loose. However, when the ideal conditions came around to get long, it was very obvious. And then boom, shortly thereafter, it took off. So I wish I had this then. So I wouldn't have to go through 3.5 weeks of grief. But of course, it makes me appreciate it even more. So I thought that was pretty awesome. Okay, so now we get to the meat of the matter. The Squeeze Ultra does two things that the Squeeze has never been capable of doing before. First, it highlights when the ideal conditions for the highest probability squeeze to the upside has been met. Okay? And again, we focus on the long side because it takes a lot of energy to move a stock higher. All that has to happen for it to go down is a lack of buying. Okay, so if there's a squeeze and it's a little sloppy, and we'll talk a little bit more about this later, and there's no arrows, you could do a bearish trade on it, buy a put or sell a call credit spread. But we'll talk about some specifics around that. But first, we really want to pinpoint the long side, okay? Because, again, for all the reasons that I've talked about. So first, it highlights that. Second, though, and this is a really cool thing, the Squeeze Ultra will automatically change to the highest probability inputs based on the time frame you're using. Okay. Now, this is something that I didn't even know was possible. Lorna said, "Hey, with some of the updates in technology now, and by my I mean Lorna's programming adeptness and expertise, I can make it do this." So what's great about this is that while I've in the past, I've typically looked at squeezes on like daily charts and weekly charts and sometimes 30-minute charts, but I never really was too interested in squeezes on like, say, 5-minute charts if you're into day trading. But now, since these parameters automatically update to what's best for the 5-minute chart, the 5-minute squeezes are great. The 30-minute squeezes are more powerful. And the daily chart has actually different parameters than what we did before. And so anyway, that's just really cool, and that's more science fiction. I just didn't know that was possible. So it's like, okay, so we got the best of both worlds here. We got the arrows showing you, hey, this is the ideal setup if you're looking for a long trade. And two, by the way, no matter what your time frame you're on, the squeeze has automatically adapted itself for the best parameters for that time frame. So I think that's pretty awesome. So here's a 5-minute chart of the NASDAQ. Again, if you're day trading, and you'll note here, it's like, okay, so here's the old squeeze. It was kind of losing momentum. It's like, wow, is this thing going to fall apart? The new squeeze, you can see that, oh, the momentum's going higher here because the parameters are adapted. And certainly this was, a bullish uptrend on that particular day. And on this particular day, when there was this 5-minute squeeze into the close, one of the things I like to do is I'll trade NDX options because at the end of the day, they're really cheap. And this was something where, and I posted this in the room, but I bought 10 call debit spreads at 590 and 542 and then sold them 15 minutes later at 20, 30, and 40. So this turned into a quick $43,000 trade after about 20 minutes. So that's something that's a kind of a unique thing that you can combine with this new squeeze because it's ideal conditions for the 5-minute chart, and you can trade that last 30 minutes of the day. If there's an ideal squeeze, obviously you want to focus on the long side, get some cheap options. But if it's not there, then we found that the market typically falls into the close. So obviously there's a few more nuances than that, but that's pretty awesome. For those of you that aren't familiar, we do have a trading room where we post this stuff, swing trades and day trades throughout the day. They can automatically be sent to your phone and different things like that. And so we're watching the markets all the time and kind of posting what we do. Google, again, day trade in Google, and then we'll talk about some swing trades. We got ideal conditions for a squeeze. We're buying calls at $12.38 and selling them for $18.50 on the same day. And again, just kind of a nice, easy way to like, all right, this thing has got some lift to it. And that's what we're looking for. This was today. So, today the markets, if you watch them at all, they kind of gapped up and drifted higher all day. And you'll notice that on the 5-minute chart, there were arrows all over the place. And so what I have found with this is that if you get a squeeze without arrows, the indexes will typically fall because the indexes tend to go back and forth. But when you've got these arrows showing up all day, that's when you kind of get that, I call it just the continental drift. The markets are just drifting higher. They're not really rallying hard, but it's just like, oh, they're higher. It's just like they're melting up. And this is a good way to see that because many other days you'll see squeezes with no arrows and that results in a sell-off. So if you're into day trading, and I know not everybody is, I like doing 1 or 2 day trades a day, but I prefer doing swing trades. I like to go to the gym during the day and do all that kind of stuff. But it is kind of fascinating that they do work so well now on the intraday charts. And then one last example of kind of a, staying out of a mess. Here's Amazon. I love trading Amazon for a long time. Over the last year, there was only one day where ideal conditions came together for a long. Other than that, it was just an absolute chop fest. And so I feel like, because I have not traded Amazon over the last year and a half because of this, and I feel like that if I would have gotten involved in Amazon, I probably would have lost money. There were better markets out there. So again, kind of going back and just saying, this is something that I'm not going to do, can save a lot of money over the long term. Okay, so profitable versus unprofitable trades. So you want to hone in on this and have a checklist. So is there an ideal squeeze in place? Meaning, is there a white arrow? Check. Have the parameters adjusted automatically by the time frame. So if you're on the 30-minute chart, it's automatically the ideal parameters. If you're on the daily chart, it's automatically the ideal parameters. Check. Okay, so now we want to find out how to find the best candidates and then the best entry points, best exit points, and then, of course, are we buying options? Are we buying the stock? And different things like that. So for a long time, and I guess sometimes I feel like a little bit of a dinosaur now because I started off using TradeStation long time ago. And, one of the tools that they have that I really like and appreciate is radar screen. And I just haven't really found this anywhere else. And I show this in the room and everybody's like, okay, I don't have TradeStation. How do I get this? And what I like about this is that you can sit there and say, okay, here's a stock, FCX, and is there a squeeze? Yes. Are the moving averages stacked positive? Yes. And then, what's the 52-week high and low and blah, 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 blah. So I've been using that for the last 20 years. And so a lot of people, even in our trading room, rely on that because I'll go through it and say, okay, here's 6 setups for today based on the radar screen because it takes otherwise it would take like forever to find those. And so what's great now is that David Starr, who works with us, just, an amazing mind, he put together essentially an online radar screen for our site where now I can dump all my TradeStation stuff into this online so everybody can have access to it. And then we can filter out very quickly where the best trades are. So now you can just kind of say like, okay, here's this stock. It's not an ideal squeeze. This squeeze is over. Oh, here's an ideal squeeze. Oh, here's an ideal squeeze. Okay, so that's great. That saves a lot of time. But wait, it gets even better. Now, first off, this isn't a database of like 10,000 stocks, okay? It's a curated list, meaning that there's a lot of junk out there that's never going to even show up on this list. Okay, so this is a list of about 800 stocks. Obviously you've got the, S&P 500, the NASDAQ 100, but most importantly, you've got things like, the IBD 50, the Growth 250, the Mag 7, all those things. So it's a great list of not only established companies, but legitimate new and upcoming companies, companies that are like on fire because they're in the right place at the right time. And whether it's building data centers or precious metals or whatever it is, they're there and they're experiencing a lot of growth. And so we want to know that. And by the way, the squeeze is a great way to get in on all of these stocks, especially things that have kind of taken off and are pausing. So from there, okay, gets a little couple layers here. We found out if we're trying to hone down the best of the best, okay, so not only what are the highest probability squeezes, okay, we know this is squeeze ultra, we got the arrow, and we know that we got the highest probability parameters for each time frame. But other part of this is that you also want to have a relative, and this is for swing trades, a relative strength versus the S&P on that particular stock of 70% or higher. Okay, I'll talk about that more in a second. So you might have an ideal squeeze, but if the relative strength on that stock compared to the S&P 500 is only 30%, it's gonna, it's like, if you combine the ideal squeeze with a stock, it's got an ideal squeeze and the relative strength of 70% or higher, and it's trading within of 80% of its annual range or higher, you essentially have now pinned down the highest probability trades that you can find. Okay. So the question is now, how do you find these trades quickly? Now, the great thing with another thing with this online tool is you can go down and say, oh, ideal squeeze. Great. What's the relative strength? Oh, 99%. Awesome. What's the short float? We actually include the short float on there as well, and the 52 week range. So that's still a lot of looking, right? But at least it's there at your fingertips. But what's great now is that David also added a filter. And so what I do now is I say, okay, look, I only want to see ideal squeezes. I want to see a 52 week range of 80% or higher. Okay. The stacked EMAs, I want to see those positive. And the relative strength, I want to see 70% or higher. And when I do that, instead of seeing 800 stocks, it'll whittle this down to essentially the only stocks that meet that criteria. Sometimes it's 20, sometimes it's 13, sometimes it can be a little bit more. So what's great about this is now, essentially with a touch of a button, I mean, this takes, and you want to do it at the end of the day, for the next day, this takes like, you push the buttons, you see your candidates, it probably takes 15 minutes, if that, to kind of get an idea of what are the best long candidates essentially on the planet for you to be looking at for the next day. So what's interesting is a lot of, especially on the news and stuff like that, everybody's focused on the NASDAQ and the Mag 7, but there are stocks out there making 52-week highs, and they don't care what the NASDAQ is doing, okay? And, there's way more out there than just the Mag 7. I think it's always important to remember that. So here's Western Digital. Beautiful squeeze in October, boom. Beautiful squeeze here in December, boom. Beautiful ideal squeeze here, even one arrow's fine, boom. Okay, so that's kind of what we're looking for here. And Western Digital at the time met all the criteria of not only was there an ideal squeeze, but the relative strength met its criteria. The 52-week range met its criteria. Here is another one, Seagate. Same thing here. This is a little bit longer setup back in August, paid off. Ideal squeeze paid off. And you can see here it didn't set up an ideal squeeze. It did work, but the ideal parameters weren't met. And then ideal squeeze, bam. And another one, LITE, kind of the same thing. Okay, so now the question is GILD. So what I want to do now is let's look at some current ones, and then like how do we get into this? So the Squeeze Ultra is great because it's just so obvious. Like it's so clean, it's so clear. There's no like interpretation. It's either there or it's not, and I love that. So now what we need is we want a checklist when we have an ideal squeeze. Okay, so what's the ideal entry? And if we're trading options, what kind of options do we trade? Okay, and then what's the ideal exit? All right, so let's take a look at that. So here is a recent one. This was actually one we covered during our first webinar, and Ross Stores. So I'm a fan of the 8, 13, and 21 period moving averages, and what I want to see is that they're stacked positive, meaning that the 8's on top of the 13, which is on top of the 21. And then when I see the white arrows, what I want to do is I want to buy pullbacks into this zone. Okay. You don't have to be like, oh my God, I got to get the best entry. As long as it's in that zone somewhere, that's fine. You wake up, it's an hour into the day. Are we in that zone or not? If we are, cool. Let's buy the stock. Let's buy some call options 30 days out. Et cetera, et cetera. And I like to scale in. Like I don't like to go all in at once because, this is in a squeeze for like 10 days. And then, you'll notice that at some point the arrows go away and then you'll see what's called green dots. Okay. Now, the green dots simply mean that it's no longer a squeeze. So if it's red dots or black dots, it means it's in a squeeze and it's building up energy. Then if you see the green dots, it means that the squeeze has released the energy, okay? And that means the stock is going. And if you look up here and say, oh, okay, the stock's going, great. All right, so that's great, but when do we get out, right? So first we'll kind of look at here. Okay, here's the arrows. We buy the pullbacks, and I'm really a kind of a stickler for this because, you know, if it's starting to go and you're like, oh my God, I'm going to miss it, and you buy it, especially if it's an option, then, you know, you really got a bad entry. And so I really like kind of waiting for that. So one of the things that we can do on this, and you'll notice here that, you know, it's the 8, 13, and 21 EMAs. One of the things we've done, and Lorna has done this and uses it with her trading and stuff like that, is you just kind of code it into a cloud. And so this is something that you guys would get during the class as well. And so if you see a green cloud, buy pullbacks into the green cloud, okay? So if there's arrows and you see a green cloud and, you know, you're in the green cloud, buy it. Awesome. Here's some arrows. You're in the green cloud, buy it. Okay. So the main thing, what you want to avoid is, here, let's go. I'm going to show you this, the purple cloud. So if there's a purple cloud, don't buy it. Okay. This is Netflix. You know, here's a squeeze, purple cloud. What does that mean? That means that this is not going anywhere but down. So you really want to wait, you know, maybe we're going to get a green cloud down here, and that if so, great. Maybe this thing's ready to turn around. But this is a great way to stay out of trouble. It's like, oh my God, this thing is at support. Green, you know, red cloud. It's this. You don't, you know, yeah, you might have made a little bit of money there, but you're kind of, you know, you're also fighting gravity. And so when you see this, just think that gravity is in charge. Okay, and so yeah, you could use this to short all the things. But, you know, that's what I mean. I just wanted to point out as a differential. So let's go back here. Green cloud, okay? So checklist, white arrows, check. We're at the green cloud, check. Okay, so we're going to buy it. And same thing here. We got white arrows, check. We're at the green cloud, check. Okay, easy peasy. That's the entry. So from there, another bonus with this trading system is called the early in, early out pro tool. This colors the bars and gives you an early heads up when the momentum is about to roll over, giving you a chance to exit early. Okay. Now that's my final exit. If you guys are familiar with like Fibonacci extensions, if we get up to a 1618 extension, I like to take some profits, and I'm a fan of scaling in, scaling out, but the last piece of it, I'll wait until that momentum runs out. Okay. So what does that look like? So, on something like that, so you'll see that, so here's the normal bars, right? So the normal candlesticks, they're green, they're red, et cetera, et cetera. And what the squeeze early in and out does is that it'll paint the bars. And, you know, when the squeeze fires, the bars are going to be light blue. That means that momentum is above zero and ascending. And then when you see the, you know, and look, this is the 1618 up here. So you would take some off here, and you don't really know where it's going to go, right? It could keep going. At some point, it's going to pull back. And then it's like, okay, and here it pulls back. So you're getting in here at like $180. Maybe you're scaling out the 1618. But when you see this bar, you know, it's like, okay, we're at 190. That's it. The trade's over at that point. So I would say that, you know, we're in a squeeze, the squeeze is fired, and now the squeeze is over. And then when the squeeze is over, you want to exit the rest of your position, and then you just wait for the next squeeze. It may be on this stock, it may be on another one. So, and in this case over here, same thing. Here's the arrows. You're buying at point number 1 on any pullbacks into the green zone, right? And then at point number 2, where you got the first dark blue bar, that's your exit point. And you could scale out as you go away, but at this point, remember, green dots mean the squeeze is fired. And then if you see a dark blue bar, it means that the squeeze is nearing its end. And sometimes it'll keep going, but you just want to kind of catch the meat of the move and be done. And each one of these was about a 10 to 12 point move in the stock itself. Okay, so pretty clean, right? And so how do you, and again, I talked about this. I just wanted to show you, like, so don't buy this. If you want to, that's fine. It's just, to me, it's just an easy way. If you see the purple or the red, I call it purple, but I think it's meant to be red. just stay away. There's so many better things out there to put your hard-earned money into, frankly. So how would you trade this? So this is what I do. First of all, you can just trade the stock, and I do that sometimes too. White, you have the squeeze with the white arrows. You're in the zone here. Great. You're going to have a couple of buys here. You're buying the stock around 180, give or take. If you're going to do options, what I typically like to do is in the money options, like a delta. If you're familiar with deltas, if you're not, no big deal. Delta of about 70, and what that simply means is that it's, if the stock's at 180, I want to buy a little bit below that. Okay, you don't have to, but I think it's a good rule of thumb. So I also like to go at least 30 days out. Now, the reason, even though I might only be in the trade for 10 days, the reason I like to go 30 days out is I want to put every advantage in my favor that I can. And by going at least 30 days out, now sometimes people ask, can I go 60 days out? Absolutely yes. Can you go 90 days out? Absolutely yes. But the minimum I would do is 30 days, because that way you're giving the trade a chance to play out. And the premium decay will be minimal versus if you did an option 10 days out. If you did an option 10 days out, basically the trade has to work in 10 days. And if it doesn't, your option could expire worthless. Okay. 30 days out at least gives you a little bit of room. Okay. So in this case, if you're buying the any money call at 10, basically by the time it got up here, it was selling at about 18. Okay. If you are a more advanced options trader and you're familiar with spreads, then you could do essentially the at the money call debit spread. I typically do 10 points wider or more. Typically on something like that, you're paying about $3 for a $10 wide spread, and you could exit the spread here, or what I'll often do sometimes, if it hits 70% of the width of the spread, I'll just get out. So in that case, $7. So you get out at a fixed target or a loss of momentum. And of course, you could also sell the put credit spread. I would sell the at the money put. I like to go at least $10 wide. Since it's at the money, you'd get about $4.50 for it on about a $10 wide. And you could exit here, or since it's a put, you could continue to let it, evaporate, so to speak. And so that's a nice thing about the puts, is that they'll make you money even if the stock starts pulling back, as long as it doesn't, go below that 180 strike. So that's a nice way to do it as well. The other example is very similar, because it was also a $10 move. So you could buy the stock at around 190, sell it about 200. So you're buying at point number 1, selling at point number 2. You could also buy in the money calls 30 days out at 10, sold them at 18, bought the at the money call debit spread, or sold the at the money put credit spread. So it really just depends on your comfort level and your experience level. I am totally fine doing stocks, and I'm also totally fine doing options on a variety of different conditions. Okay. So that was a pretty easy one. So this was one that was setting up during our first 2 webinars, and you can see the same thing. Here's LRCX. Oh my gosh, I have white arrows, and look at this. Plenty of buying opportunities in the green zone. Here, and then and now it made new all-time highs here. And that's when you start looking to take profits. Now, and what I mean by taking profits is scaling out. I will wait on my final piece for a dark colored bar, and that's where you catch a big runner. Like if this stock's going to go insane, that dark colored bar isn't going to happen for a while. So what's nice about it is that it ensures you the best possible way to stay into a big move if it's going to happen. Sometimes you get these crazy moves, right? And you just don't necessarily know exactly when it's going to stop. So again, huge fan of taking some profits off the table and then holding on to some of it to see what's going to happen. And if you look at this squeeze in Micron technology, right? You had a pretty good move there, or SanDisk. You have these kind of crazy moves, right? Where it's just like, okay, blue, and goes on and on and on. Okay, so let's look at some ones that are setting up right now. So this is one that came up on the scan. So SLB. It's currently showing an ideal squeeze. And the nice thing is when you have this indicator, you'll see over here a big green little sign that says, hey, there's an ideal squeeze. Luckily, it's easy to see here. And so remember, when you see the white arrows, the checklist rule is, great, buy pullbacks into the green zone. So you got a nice pullback here, and you got a nice pullback here. And guess what? It's still in a squeeze. So if we get a pullback tomorrow, I would buy some more. Okay. So as long as it's still in a squeeze, then anytime it comes back into that zone, I don't mind adding a little bit more. Now, this doesn't mean that you're going to add indefinitely. You obviously need to have what's your max position size? But my point is that I don't go in with max position size right away. It's like, okay, let's buy some here. Let's buy some here. And then you kind of get this blended kind of an entry. And, and you can kind of do that any which way you want, any way you want to. I always find though, like 2 or 3 entries tends to work out pretty good. So you can take advantage of those pullbacks when they happen. NVMI is one that's also, it's got its first arrow here. Okay. And so today is not an ideal entry. I'll be watching tomorrow to see if we do get a pullback. Now, of course, during the Saturday class, we're going to be going over these in more depth. And during our live trading, we'll be setting these trades up live, not only for swing trades, but also for shorter term day trades and things like that as well. There's some trades that Lorna took today, just to kind of give you an example of some day trades. So this was in the Russell futures. Here's a squeeze. So she got her entry here. Look at the little green zone. So it works on a 5-minute chart too. Little bitty green zone. And then you can see it started to pop. And then she likes to use the 8-period moving average for a trailing stop. You can use targets. You could use the momentum, different things like that too, and on and on and on. So that worked on a 5-minute chart, and literally everything I just talked about on the daily chart in terms of a checklist, you could kind of use it also in an intraday chart. I think the main difference intraday is that a lot of times there may be more support and resistance levels that kind of come into play, especially on the indexes, because they too tend to go back and forth, versus individual stocks that are probing, that are on the run there, that are actually probing new 52-week highs. And then here's some recent feedback from some folks who got their hands on the Squeeze Ultra. Well, what can I say? I started using the Squeeze Pro Ultra 1 week ago, and I've made about $30K in profit in stock, spreads, and 0 DTE, all at great entry points. The stack moving averages and buying with the buy arrows and scanner are making my entries and targets much more accurate. I've started selling monthly spreads on stock positions I own to leverage my trading position and increase my profit, as John had shown in the videos. Using the early in and out, I've started taking some nice quick trades and exit neatly. This is keeping my losses small and wins greater on the daily and swing trades. Thank you. I'll be telling my friends about this. Bill in Dallas, between the Momo and the Squeeze Ultra, I picked up 50 points on the Micro GC today. That's gold. Just added another 7 in the past minute. Time to close it out. David, Lorna, I really like getting the indicator so far in advance. It gives us time to work with it and develop a sense of how it works. I've made 5 times the cost of the class on just a couple of trades using the arrows. Yeah, so the nice thing is if you're interested in this, we'll show you how to get it here in a second. You can actually start using it tomorrow, and then by the time we get to the Saturday class, you'll already have used it for a couple of days, and so you'll be kind of, you'll be ready for some questions and things like that. Took this class, I purchased the indicator, spotted along today I might have missed. Looking forward to seeing it play out. I love the knowledge I've received from JC, that's me, and Simpler Trading. I'm only a part-time trader. I'm an ICU nurse and I work nights. Trading as a side gig is allowing me to bulk up my retirement without crushing my body, brain, and soul, working a ton of extra shifts. And so I know there's everybody that trading is interesting because it attracts, there's people from all walks of life come to trading, and the common theme is just that individual desire to be a little bit more independent, and I think that's great. And so, it's we do a live event once or twice a year, and it's always awesome seeing everybody get together and what they're doing. All right, so a couple of other tools that will come with this. One, there'll be some labels that'll show you if there are squeezes on other time frames. So here's an hourly chart, the SPX, and you can see it when this was taken, there were arrows, ideal squeezes on the daily, the 3-day, and the weekly. So I think that's kind of awesome, because if you do see arrows on some of the larger time frames, that typically means it's going to be a bigger move. And then also there's a tool here called the stats tool that will actually tell you what the average move is for these squeezes. So I think that's a useful tool as well, and kind of helps you plan. The weekly chart right now on the larger time frames, I do like to keep an eye on those. So if you're looking at a weekly chart, my rule of thumb is typically once a squeeze fires, you're typically in the trade 8 to 10 bars. So if it's a daily chart and it fires, you're going to be in it for about 8 to 10 days. Now, it could be 6 days, it could be 12 days, but 8 to 10 bars is a good average. So on a weekly chart, that means if you're a longer term trader, that's 8 to 10 weeks. And then if it's a monthly chart, it's 8 to 10 months. So if you see a monthly squeeze, ideal squeeze, you're going to be buying leaps on that one, right? And then if you're in a 30-minute chart, a trade, you think 8 to 10 bars, what is that, 4 hours? And if you did a 1 minute squeeze, 8 to 10 minutes. So that's a good rule of thumb, is whatever time frame you're looking at, the trade, once it triggers, is gonna, it's gonna be about 8 to 10 bars. And so that's a good way, that's an easy way to plan then, okay, if you're getting options, like what duration do I get? So what I'm looking for in something like this is I look forward to my trading, and ideally, look, I want to spend more time at the beach, more time walking and being healthy. And so that means sometimes it's like, okay, I don't want to be in front of the computer all the time. And so what I'm looking for, especially for my swing trades, is a reliable tool that gives me an edge, clear entry, clear exits. Like if I was going to walk out and I could tell one of my kids, like, hey, can you watch this for me and, do this, this, and this? And it's like, yeah, no problem, Dad, because it's incredibly clear what you're looking for here. Most importantly, it filters out the mediocre setups. Look, let's only take the best trades. I personally like trading options for leverage, but I'm also fine just buying the stock. Some people ask, like, can you do this on futures? Like, what about Forex? And the answer is yes. I've traded currencies with these, gold futures, et cetera, et cetera. With trading options, the key is that you want to give yourself the gift of time. A lot of times the biggest mistake I see people make trading options is, they say it's a daily squeeze and the stock's at 200, and then they buy the 210 out of the money call, 5 days out. And while that will work sometimes, it's just the opposite of what you should be doing. And so in part of the class 2 is we're going to go through checklists on, okay, look, if you're going to do options, this is how you do it. So even if you're new to options, like it's not hard. It's not like, oh, you got to do this complex butterfly and leg in and out of six wings, and none of that. Just buy a call. And so it's not hard. And it's not about forcing entries and exits. It's really being able to identify that you have an ideal setup, so you have the confidence to hold on, and you have a very clear way to get in and a very clear way to get out. And that's really what it comes down to. So the squeeze is a free tool. It's all over the internet these days. It's great as the OG version I created decades ago. I had 1 7-figure trade with the free squeeze. The Squeeze Pro, I had 9 7-figure trades. And after collectively thousands of hours and research, I created the Squeeze Ultra to really narrow down the best and highest probability trades regardless of time frames, okay? So not only does it pinpoint moments in time when you can look forward to a greater than expected move, but it is superior at keeping you out of bad or meh trades. And I think that's kind of the hidden gem of this. Is just like, okay, pass, take it. It's like Spartacus, hold, and then go. And, you just want to strike at the right time. So the settings are refined to highlight what is proven to be the highest probability squeezes on whatever time frames. So you got the best conditions, the cleanest setups, including refined settings for the OG red dots on daily charts, as well as intraday charts, which I think is great. And then I think, Henry, if you're around, I know, when you and I first started trading together, I introduced you to the original squeeze, and I think that became an important part of your trading. And then, the Squeeze Pro, and I think we both learned some things from the Squeeze Pro. It's like, well, the black dots are great because there may be some red dots. And then, but yeah, I was curious, what, you've been playing around with the Squeeze Ultra, like observations you've made or questions you have or anything like that. Or if there's any charts you want to look at, I can bring up a chart.
Yeah, no, we can totally do a little bit of all of that. And, I always like to preface these sessions by, just being thankful that I started in trading by finding signals that worked, right? By looking at the squeeze, by understanding that there are, just moments in time where the market is in a certain kind of mood, which I think is either, can be described in those 4 phases of market expansion, distribution, etc. But the squeeze does such a good job of helping you figure out which of those that you are in. So I just think about those people that have gone through trading, and they start off learning stuff that doesn't even work. As I was prepping some of my thoughts for tonight, I was thinking, who will this really benefit the most? And it's going to benefit those traders the most that have never seen this before, that are like, I'm totally new to this method of looking at, compression and expansion in a market. They're the ones that stand to gain the most. But everyone that is a student of the squeeze, myself included, as much as I have been using it, I've really taken a lot away from it. So, I just thank you and Lorna for, putting the effort in to code this up, to make it better. I think about how there are decades of understanding that go into this. So, again, just being appreciative of learning it. And, I think we can actually kind of, I will turn the screens back over to you, but I thought I might take just a quick second to see if this rejection
go for it, yeah.
Yeah, I think it'll flip back over depending on the active mic. But when Lorna speaks to the idea, that a lot of the shorter time frame squeezes have been a little more accurate, I want to show you guys how I believe the market is evolving and how things are going to be changing, very rapidly in the weeks and months to come. And that is primarily because of the addition of the Monday and Wednesday expirations, right? So when you think about the way that expiration drives action, which if you've studied options for any length of time, you have seen that is now just being exaggerated by these additional, moments in time. So I just show you here in Tesla, because this is probably the stock that I study the most. And we see a little bit of a reset right here. This is the February expiration, because you get through the monthly expiration, you get the reset, and where does the stock drive? Well, directly into 400, maybe a little under, sure, it does get down into 394, but think about the way that it is just going down like a beach ball being held underwater. It goes under that 400 strike. It, kind of emphasizes every contract that was set to expire for that Monday. And then when you get into the next session, it's very quickly recovered. And this is where I don't think that we have to get into the labeling of, Elliott waves or the understanding of trend moves. But this is a very nice beach ball bouncing from up under the 400 and a good recovery. Then look at the difference in the 10-minute charts. Anyone that's been following my work will know that I am a huge fan of the 15-minute squeezes, because I always found 10-minute and 5-minute to be just a little bit too noisy. Well, look right here at the 10-minute. And those of you that are in the chat room, I posted this yesterday midday showing you that this was setting up. So it's just, to me, studying the stocks that I know the most and seeing that that's a great buy signal, or the previous squeeze would have only shown the low compression variety. And then look at how we go straight into 410 and from 410 into 420. So do you see how that drives it up into 420 for Wednesday? And then what's the focus here? It is the focus of letting all of the Wednesday 420 calls expire worthless. Because as traders get excited, if you're following the squeeze back in here, you can get involved on the path into that psychological target. Once that's hit, you're able to sell shorter dated options to everyone that has chased that move. So whether it be the end of day, you see that one right there that populated just before the session closed, or the one that you're getting into earlier, this is some of the best intraday stuff that I have found. And I think that's a very credible and helpful adjustment to it. And then past that, really just going back to trusting the signal. Someone today in the room asked me a question about just taking this versus the retracement. And I said, really, you just have to understand yourself, understand the risk in whatever strategy you're using, and then buy the ticket and take the ride, right? Because we never know for sure if anything's going to work. You know, I can't tell you the next moment for sure any better than any other person. But do you see how the ideal squeeze populates down here? I know some of this is repetition because we've all been focused on the semiconductor space, but look at how, you know, you hold the moving averages, you buy the pullback into those that are, you know, whatever fits your ideal aggression level, and here we are at new lifetime highs. So, you know, these are just some of the things that I've been following, some of the examples that I have seen in the most recent market, and what I believe is really going to help drive us as we get deeper into 2026. So, you know, it's kind of what I've got. I'm happy to field questions or kind of work with you guys further on this. I just think the intraday adjustments are really going to be helpful.
No, I think that's awesome. And I think it's, you know, you made a really good point of going like, man, how great would it be to, like, if you're starting trading now and to get this squeeze versus, you know, kind of in the previous renditions, obviously I love them and, you know, very close to them, but it's like, this is so much easier, and which I really appreciate. And then the other thing that you said too is that, you know, along the same lines, you know, especially the lower time frame, you know, 10-minute squeezes and stuff like that, I kind of just didn't necessarily pay attention to, just for all the reasons, because it's like they're kind of noisy. But now even those are really clean, and so I think that actually opens up some interesting opportunities as well.
The ability to be able to adjust the settings based on the time frame that you're using is something I never thought about. You know, to me, the squeeze is always a very generic, like this is the way you apply it, but it is so different based off your horizon. So nice tweaks, Lorna. Always enjoy seeing the way your mind works.
Yeah, certainly good tweaks. Well, let me show you guys then. I'll just I see a lot of questions on like, okay, well, how do I get this, and like, when's the class? So let me show you that real quick, and then Henry and I are happy to stay around, you know, answer questions and stuff like that too. And so let's go through that, and then yeah. So I would just say that, like I said, you know, the squeeze is all over the internet, and there's actually a lot of people that teach it, and I would just say, you know, I'm kind of I'm the one who made it, right? And so it's nice when you kind of learn from the person who understands all the nuances of something. And I do see people kind of teaching the squeeze. I appreciate it, but I also see some of them don't necessarily understand it that well. So this is something where not only is it kind of the newest version of this, but you're learning from its creator and the people that have been using it for, you know, 10, 12, 15 years. This is a quote. I just love this quote. And Mark Douglas really kind of, you know, he hit trading psychology right between the eyes. He's like, consistent losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose. And what I love about that is that it really incorporates just the idea of having a setup that gives you the most confidence in a trade that, yeah, you know what? Okay, win rate. You know, you're never going to get 100% win rate, but you have a higher confidence in its ability to work. And because look, nobody takes a trade thinking like, oh, I'm going to take this trade because it's going to lose money. But, you know, if your win ratio, if over the course of 25 trades, you're not making any money, then the setup's mediocre. And so the key with that is to have essentially a superior setup that not only when you get into it has a good chance of working, but the same setup also is telling you, look, don't take this one. Okay. Oh, by the way, don't take this one either. And it's really rare to see something like that. Like it's kind of unheard of to have a setup that says, yeah, no, don't take this one. You might like the stock, don't take the setup. And so I think that to me is one of the more exciting parts of it as well. Part of this also ties into, you know, my trading journey is certainly very heavy on the psychology side. And part of, I love tools that kind of save yourself from yourself. And the markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end and to hold on to losing positions too long. But all you have to do is follow these setups and you won't be in that situation, okay, which is great. You're not going to be chasing or anything like that. And so I think that's great. And, you know, while I think that big trades once in a while are nice. Don't get me wrong. I always love a big trade, but they can be, they can be a lot of effort and things like that too. What I really appreciate is just being able to, manage trades on a phone and just say like, okay, this is manageable for today, and not too stressed or anything like that, because I have confidence in the setups, and that's it. I mean, that's what makes it easy. All right, so the Squeeze Ultra class is actually coming up this Saturday, February 28th. No worries if you can't attend live. We will record it. It's going to be from 12 to 4 Central. Now, with this class, and there's a couple different versions of it, you're going to get a copy of this tool, all the things. And so you can see the link down there. I think Lorna will probably post it in the presenter chat. You can also type it in, simplertrading.com/Squeeze Ultra. And in fact, I will bring that page up here in a second. But let me just kind of review what we're doing here. And I always say, like, when you look at something, especially something like this, I mean, I do a lot of different kind of educational things, but my guideline is, okay, if I do this, like I'm going to pay this fee for this tool, or I'm going to pay for this fee for like this, mastermind or whatever it is, at a minimum, I should get a 10x benefit from it. And if I can't get 10x from it, why am I doing it? And so I would use the same thing with this. If from what you've seen on the tool, if you pay $9.97 for it over the next year, can you 10x that? And if the answer is no, could you make, could it, it's like, okay, I could see that turning into, 10xing that. And if the answer is no, it's like, well, okay, maybe this isn't, maybe it's not for you. Or if you're looking at going like 10x, I could 100x, I'm going to 100x this, then, obviously it's a no brainer, right? So the basic package by itself is, you have you get that indicator. So the indicator right now is for Thinkorswim, and it's for TradingView. But if you don't have those, so if you have E-Trade, for example, we don't have the tool for E-Trade, but there are a couple of options for you. Probably the easiest, TradingView has a very low tier. I think you could probably do either one, either TradingView or Thinkorswim. I know Thinkorswim, you could open up an account, deposit $100. There's no fees. You never get charged anything. And you could just, look at the charts there. I think you could do something similar with TradingView, and then you could still execute on E-Trade or Fidelity or Schwab or wherever you are. We're kind of broker agnostic. We just kind of, the brokers we work with, they happen to be easy to work with in terms of the indicators that we create. And then also, what's included in this is the class. So you get the tool, and then we have the class on Saturday. There's going to be an indicator install session. So, if that part is always like, oh, I hate that part because it's always tough to figure out, Lorna's going to be doing that. She's awesome at it. I ask her questions on Slack every day. Like, how do I do this? And how do I do that? And she's awesome because she always knows the answer. And in addition, there's a bonus, that indicator I showed you that painted the bars, the early in and out pro. Someone asked earlier about FCX. Yeah, and this one, you can see it's been an ideal squeeze. You buy in the green zone. Now, when you see that this is green, it just means that, hey, the squeeze is about to fire. So that's kind of a nice, heads up. But right now, if you're in it, you just hold on. And you hold on until you see a dark blue bar. Someone else asked about RTX and is it still valid? So here's what I found on this. I actually like flushes like this. And so, typically what I'm looking for if there's a squeeze, I'm buying into the green, but I'm also fine buying through the green as long as it's still green. Now, if it goes through and then turns, red or purple, I'll stay away. But as long as it's still green, I just kind of look at this as a good entry. So maybe I got a third here, a third here. Oh, let me pick up a third here. And let's see if this thing can fire. Okay, so that's the early and out pro. And as a bonus, because we have not released this to the public yet, is that you get a 60-day exclusive beta access. And it's going to, a non-renewal, so it's not going to be like an auto-renewal thing or something like that, is the radar screen. And I think this is going to be a hugely powerful tool. It was one of those, it was almost like an aside, like, oh, we should put together a radar screen. But once we saw what David put together, we're like, oh my gosh, this is a tool that's going to help so many people, because the biggest challenge we've had is once we have a cool indicator, it's like, wow, this indicator really works. Okay, what stocks do I trade it on? Good question. That question, that resistance, that unknown is absolutely taken off the table, because not only do you have this great tool, but you know exactly, without a shadow of a doubt, the best stocks to trade it on any given day. And that's never happened before. We've never had a situation like that. And that part to me is just like, when we first started talking about this, that was an unknown that I thought, again, a nice to have. And now it's like, it's completely changing the game here. So I think that part's great. Okay, so that's the basic. The premium is, of course, all of this, and then you also get 2 additional tools: the multi-squeeze ultra indicator and then the stats tool. Okay, so you're like, okay, well, what are those? The ultra indicator, that's when you can put something on the top of your chart here and just say, let's see, SPX. I'm trying to think of one that had it on here. And what you'll see, and of course this is on the SPX, it's like, okay, there's an ideal squeeze on the 30-minute chart, right? So you can see these different time frames, and you'll see that there's what ideal squeezes are on. So that's really good, because if I see a lot of white on the higher time frames, then that typically means that something bigger is unfolding. And then the stats tool is the one that'll show you like, hey, over the last 5 years, the average squeeze has gone up 32 points, and so that's nice. So those are great little tools there. And then the elite part of this, and this to me it's kind of critical, is of course you get everything in the premium and the basic, but then you also get 4 days of live trading. And the reason I think this is so important, and the best analogy I can think of, is golf. So let's say that you get invited by your potential father-in-law to go play a round of golf, and he's a big golfer, and you're like, oh my gosh, I'm so nervous. And you've never played before, but you spend the weekend reading 3 golf books. So now you show up to the course, you know everything there is to know about golf. You've never swung a club. So how do you think it's going to go when you tee up on that first drive? You've read all the books. You know probably more about the history of golf than he does. You probably know how to hold the club better than your father-in-law. But how do you think that first drive off the tee is going to go? You're probably going to whiff because you've never swung the club. And then the thing about golf is that you need time swinging the club in front of someone that knows, how to swing a club. It's like, yeah, you need to loosen up your grip. You need to do this. And so I think it's the same thing in trading. So it's one thing for all of us to stand here or sit here and look at charts and look at things that happened last week or a couple of years ago. And that's all well and good because you want to see, you want to look at examples and see what happened. But what about live? Hey, this thing is actually, down through the green zone. Is it still okay to buy? You don't know unless you've actually been in that situation. And so what I love about the live trading is you get a chance to essentially swing the club, with someone who's been doing it for 30 years. And, the thing about the markets is that often, yes, many times there's kind of like, I'd say situations where like, oh yeah, that's a textbook situation, but there's always curveballs, right? And it's like, well, geez, should I still buy this? The S&Ps are down 90. And it's like, yeah, let's take a look at that. And so, I've seen so many different kind of markets from the 90s boom, the 2000 .com crash, 2008, all the things, right? Obviously COVID and all that kind of stuff. And nothing's changed. It's all the same. And, even though there's, order flow and all the things, it's still the same markets and it's the same stuff. And so the live stuff gives you a chance to see that. So during the live trading, we'll set up swing trades, but we'll also do day trades. So, we'll find stuff to do. We're not going to sit there and twiddle our thumbs. I'm going to have other people come on and help out as well. But the idea is, hey, with a day trade, you get an at bat. Now, if you don't day trade, that's fine. You don't take the day trade. You can focus on the swing trades. But, if you're trading a 5-minute squeeze, it's a lot of times similar to trading a daily squeeze. It's happening over the course of 30 minutes instead of 3 weeks. So you get to swing the club, right? And so that's a good way to do it. And then if we look at, that's a good question, Bob. So how do we find trades after 60 days? So after 60 days, if you would like to continue the radar screen, it would be like a pretty manageable subscription, and we're kind of going back and forth on what that would be. You could also, so we'll have a couple different ways to do that, but I think that's one of the things that we actually are going to continue to build it out. I think it's going to actually be a pretty powerful tool. Okay, so if you come up to the website, it's pretty clear cut. And by the way, if you do want to get this tonight, you will get, of course, the indicator. And then on Friday, which is in 2 days, I'm doing the third pre-class session. So Friday, I think from 1 to 2, I'm going to do a pre-class session just to kind of prep you for the class. And then after that, I'm going to roll into our main trading room from 2 to 3. So if you're not a member of our room and would like to try it out or do a trial, I think you'll see an email with that. You could join me from 2 to 3 on Friday, and we can do some live trades for the close. And then after that, from 3 to 4, I'll be doing kind of a Q&A in that room as well. And so just kind of answering any questions you might have. And then on Saturday, we'll roll into a 4-hour workshop. We'll take breaks. It's just more of like, hey, let's go through some stuff. Let's make sure that you're comfortable. Here's some checklists for the trades that you want to do if you're going to do options. And, we'll look at checklists for swing trades on a daily chart, on a weekly chart, and even like on a 30-minute chart. So just so you kind of have the different scenarios there. And then we'll go through the radar screen. We'll find the best setups for the next week. And those will be kind of the basis for what we'll do during our first live trading day together. All right. Okay, so let's look through some of the other things here. And, again, so the radar screen, we went over that. This is, you guys will get 60 days of access to this for free, no automatic renewal or anything like that. And you can just check it out. We're continuing to make improvements, and by we, I mean David. I think this is going to end up being kind of a robust tool that I'm certainly not going to want to live without. I think for the first time in my career, I can actually consider canceling my TradeStation subscription. The Early In and Out Pro, this is a really key tool for managing exits. And I think, I always say entries are a dime a dozen, but it's the exits that make you money. This is how you manage the exits. In addition, we'll be doing some basic Fibonacci work. But if you don't know Fibs, for some people, Fibs is like, what? Great. You know what? You can just use this, and it makes it pretty easy. On February, again on Friday from 1 to 2, if you sign up before then, that's our last bonus session before the class, and you can join me for that. And then, and I won't go through, I'm not going to read all these again, but just to kind of give you an idea. So, the $9.97 package, the main thing there, of course, is that you actually get the tool with the arrows, but you also get 60-day access to the radar screen and a few other bonuses. And then on the premium package, if you weren't familiar with what the Ultra tool and the stats tool, the stats kind of just show you like, hey, this is, the average squeeze, went $58 or whatever it was. And then, these here will show you on different time frames, is there an ultra squeeze on that or not. This is hugely powerful, and we'll talk more about this on Saturday, but it kind of is part of the checklist is going to be like, okay, here's the daily squeeze. It's ideal. Great. Is there also an ideal on the weekly? If there is, it can tend to be a bigger move, and we're going to adjust our options accordingly. Okay, and so that'll be part of the checklist that we go over on Saturday. For the live trading right now, these could change. Just, I could get sick or something like that. So sometimes we do have to change them, but these are the dates right now. Thursday, March 5th. So that'll be essentially next Thursday after our Saturday class. And what I like to do, so we used to do these like, back to back 4 days in a row. And man, that was exhausting. But what I also found is that was very beneficial is that we do a deep dive, and then you guys get to go out and trade on your own. Now, I'll be in the mastering the trade room, so if you guys have questions, you can come in the mastering and trade room. But then you're gonna have a couple weeks on your own, and then we're gonna get together again. And now you're gonna be a lot more knowledgeable. You're gonna have used this thing for a couple of weeks. You're gonna have more questions, and we're gonna get together and we're gonna talk about those questions, and we're gonna do new live trades. And then we'll have a couple of weeks off, and then we'll get together again on April 16th. And then we'll have a short break and get together again on the 21st. So we kind of spread it out. If you're working full time, gives you time to, if you need to plan for a day off or something like that. But again, I just think that it's so critical and so important. And you'll have, and Lorna, who helped me, she was instrumental in programming this. She'll be with me on March 5th. Henry, who you heard today, and he's just a very stalwart, just kind of here's the guidelines and here's the rules, and he's he learned from me, but then kind of developed some really cool strategies on his own, which I just think is awesome. And he's his own man, so to speak, now, which is fantastic. And then on April 16th, if you have not talked to Heather yet, fantastic. She's kind of one of those things where like a quick study. She kind of like knows me better than I know myself, knows my strategies better than I know them now, which again is great. What's the saying is like, I've forgotten more stuff than I ever knew, or whatever the saying is. And then David Starr, who kind of put together that whole radar screen, will be on with me on the 21st. So it'll be amazing group. We'll get to hang out. You guys, even talk to each other in the room. We do have a deal with PayPal. If you would like to use credit, what happens with PayPal credit is you can add to cart, and then it's 6 months, no payments, no interest. We've had people do that. They trade, make enough money to then pay off PayPal. Obviously, can't guarantee that's going to happen, but we get stories, and that's kind of a cool way to do it as well. So that's an option, just if that's something that you're interested in. Right now, we do have the indicators for Thinkorswim and TradingView, and I guess the best thing to do is if you say have E-Trade, just get a TradingView or Thinkorswim account, and then that way you can at least look at the tools. You can trade wherever you feel most comfortable. If you have questions, you can call us or just email us at support. There's Sarah and her team are just kind of hanging out. I'm sure they're at some point either they're watching The Witcher on Netflix in the background, or they're ready to take the calls. I've been watching that recently, so that was in front of mind. But if you have any questions or anything like that, and then again, I'll just kind of leave this here. And happy to answer any questions. But, thanks for joining tonight. And if I'll hang out here and answer questions and anything like that. But just want to make sure you guys saw some examples. Just saw how clean it was to get into these trades, identify these trades, get out of these trades. And I'm super excited to share this with you. Not only the tool itself, but also getting together on Saturday. So we can kind of just go through this, and then you can emerge from that just feeling very comfortable with your trading going forward. All right. Whew. Okay, that's been 90 minutes, so I think that was probably enough talking. So I'll hang out here for a bit. I'm happy to answer questions via text and things like that too. I will leave the link up here. I'm going to leave this little page here as well, so you can see the packages. And then otherwise, you guys have thanks from a fellow Texan. Yep. Hey, welcome. Yeah. Awesome. I saw a couple of people that are here in Austin and all around, so good stuff. All right, guys and gals, thanks for joining us tonight. Always a pleasure. We'll hang out here for a little bit here, and looking forward to working with you all on Saturday.